We heard in the opening session a really interesting beginning to the conference. The conference theme, as you know, is Execute, Transform, Realize. We heard from the Central Bank Governor, Dr. Kumaraswamy, who pointed out to us the fiscal environment and the way forward on monetary policy, and some key insights on trade, FDI, and exports. We also heard from State Minister Iran Wickramaratne, who talked about what we can expect in the near term from government with respect to reform of customs, inland revenue, and the new Exchange Management Act. Deputy Minister Harsha De Silva talked about our medium-term strategy for sustainable growth and what the government plans are to get us there. He also talked about the quality of exports, the quality of tradables. Our guest from India, Mr. Sanjeev Sensal, talked about the need for flexibility in policy making. That is current and that can adjust to an ever-changing environment. Whilst all our thoughts and recommendations are critical and must be implemented, particularly the initiatives the governor and the two ministers alluded to, the flexibility aspect to me is the most crucial. To be this flexible, we must have robust implementation structures and implementing institutions. That's where strong institutions and proper governance rules and procedures become critical. That's what Singapore did. Good governance, rule of law, efficient government structures, and above all, the ability to attract talented and capable people. I remember a rare occasion where I had the privilege and great honor to meet the late Lee Kuan Yew long after he retired from active politics in the presence of the then head of state. His single piece of advice to Sri Lanka was, get your discipline and rule of law right, everything else will follow. And I think our guest from India alluded to the fact on how in the late 60s, discipline and rule of law became the most important thing in Singapore. In this context, executing reforms and building better institutions, which is our topic today for this session, becomes critical. Because we heard from the policymakers, we heard from the planners in government, we had a very insightful presentation from our Indian guest. But in order to get all of these things done, better institutions and good governance become important. Sri Lanka has a large public sector, as you know, and the government has a large presence in commercial areas, such as banking, finance, insurance, aviation, utilities, petroleum, etc., etc. Some of these SOEs are either monopolistic or oligopolistic at best. We have to ask some questions. Do they operate efficiently? Do they distort the market where it is difficult for private sector to perform? Are their services up to the mark as far as the public is concerned? Are they a burden on the national budget, or do they contribute to the national budget? Sadly, the report card is mixed at best and not desirable at worst. What action can be taken? As the topic of the conference indicates, we need to talk about realize. What do we need to realize? That's what we'll be looking at this session, with at least two perspectives on the regional and international experience and other expert views from our panelists, who have had wide experience in this area, both internationally and locally. I'm told that the Honorable Minister of Public Enterprise Reform will join us later, hopefully to field some of your questions, and some of mine too. We have Ganaka Herath, a partner of McKinsey's. We have Sashank Srivastava of WSD Consulting and formerly of the Qatar Financial Authority. Thilan, who doesn't need any introduction to this audience. And we have Sunil Hettiarachchi, the Secretary of the Ministry of Education. And Honorable Kabir Hashim, will join us later. The 3 presentations will be of 15 minutes duration each, leaving around 35 minutes for question and answers. Questions to be submitted using the Ecowave app, or written down on the sheets of paper that you have at your table. So enjoy the session, and please be interactive in the 35-minute session so that we can take out of this some useful insights on what we need to do next. Thank you. Can I invite Ganaka to do the first presentation?
Thank you, Mano. I wanted to just spend about 10-15 minutes talking through a couple of the more innovative approaches we're seeing today across the globe in terms of how governments implement economic, social, and fiscal change. I think the starting point is there is so much diversity of opinion out there today in terms of what is the right approach. I am not advocating one particular approach to be the way to go forward. This is just a approach that McKinsey has used in multiple countries across the globe, in about 50 different countries actually, and where we've seen real success. So let me talk through that in some detail, and I'm happy to take questions. Before I get started, what we see is when we look across different countries, there are a common set of challenges that are faced in terms of implementing economic, social, and fiscal change. Leadership at all levels, whether it be at the top of the government, at the civil service level, at line ministry level. It's that capacity to actually manage and implement change. Stakeholders. I don't think I need to talk too much about stakeholders, but you've got entrenched, powerful stakeholders, in many cases with competing needs, and in some very unfortunate cases, competing needs that are actually going against the good of the country. Silos, federal versus local, different needs, different objectives, in many cases competing. The civil service, there is in many cases a level of inertia that you see in the civil service towards movement, towards action. There can be a lack of motivation, there can be a lack of speed. And I'll talk about this in greater detail when we get into some of the processes. But in many cases, civil services are geared to think about policy. And what we are now asking them to do is move away from policy and start thinking about implementation and actually delivering. And that requires some level of support and some level of upskilling to enable them. Just generally the lack of delivery capability. Do you actually understand what it takes to deliver change quickly? Not in a 10-year plan, not in a 15-year plan, but within 6 months, within 12 months, at best within 24 months. And then just the mindset of thinking about how you actually implement all of these changes. What you see up there at the moment is a 10-step approach. If you take any one of these individual buckets, it's kind of, it's a bit of a no-brainer, right? I don't think anybody's going to argue with me that each of these need to happen for us to have successful implementation, successful delivery. The innovation here is actually combining these in a sequence. So let me walk through these, and I'll talk through a little bit of examples of where we've seen real innovation across these buckets. So prioritization and outcomes. No government in the world has been successful in delivering real change if it is unable to prioritize. And this is as much what you choose not to do as it is what you choose to do. If I take us back to the challenges, entrenched stakeholders, federal versus local, you've got competing needs. You must prioritize. Labs. Labs is a complex way of describing what I like to call as 3-feet plans. Most often, we like to think of 30,000-foot planning, big ideas. Very few times do people actually go to the trouble of saying, what does that mean at the 3,000-foot level, 300-foot level, and actually, have I got something down to the level of granularity I can give you, and you can literally take that and implement it. An example of this is where we've seen in a South Asian economy, or East Asian economy actually, an entire, all the stakeholders brought together for a 6-week program to help reduce street crime. And this is a wide set of stakeholders from the government side, any kind of private sector involvement that was required. The plans they came up with were at this level of granularity. There are 13,282 policemen in the city. We have 18,000 hotspots of crime. When I narrow that down, when I really get to where there is real, 80% of that crime across those hotspots are concentrated in, 100. Focus that further, and actually identify 15 hotspots where if I concentrate my police force, I get the maximum amount of impact. Then, here are the different policemen or women, and here's who's going to be assigned to each place. Here's what time they're going to be assigned. Here's what they're going to be doing. That is 3 feet planning, and that is the level of granularity you want to be at to actually make change happen. Because there is no argument beyond that point. Here it is. Here is your plan. Go ahead and implement it. And you've got the backing behind it. Next comes the budget. Any plan without a budget is a draft, right? So you need the finance ministry to be engaged. You need an active budget to be assigned. The priorities you set are where your budget needs to be allocated. This does not mean you don't allocate budget to other important activities that the government is engaged in, but as the word suggests, priorities means you get more budget, more time. Public feedback. The time that we think that governments know best is gone. We must get public feedback. And there are various different forums. Real-time feedback through social media. Again, another East Asian economy, there was a very interesting piece where after the labs and after all the budgets were set, a huge conference was called. I think around 1,000 people attended. And the quote I remember the best was, the leader of the opposition came, went through all of the plans, and then went to the press and said, this is what I said they should have done a year ago. So literally getting that level of buy-in, even from the opposition. Roadmaps. You need a clear plan of what you're going to do, and you want to communicate that. You want to get pregnant with what the plan is. Essentially, once you've communicated what you're going to do, and you've laid out the roadmap, as I say, government is pregnant, you can't go back on that. Delivery units. This is essentially a mechanism that supports all of the other elements. Does the quantitative analytics around what your priorities are, thinks about how the line ministries can be supported, and then starts to think about performance management, which is the next step. Performance management. Malaysia is a really good example here, where in their 6-year plan, on a quarterly basis, different members of the government would have to actually go to the Prime Minister and have sessions where they actually reported back on their performance, and they were managed accordingly. Capacity building. You want to think about, across these steps, how do I enable the people that are involved to better deliver? And then communicating impact. Let me come back to that. 10 is institutionalizing delivery. When you start, this delivery is for big ideas, right? It may be how you improve education in a country. It may be how you take tourism levels to another level, to the next level. But actually what you want to do is institutionalize this approach, that you actually think about this as how you deliver everything. You go through these steps, and you're not going to be rigid about it. You will be fluid, but these are 10 steps that you want to be thinking about all the time. Why I held up back on communications is none of this matters if you do not communicate. Right? often we see governments actually achieving a lot, working in the background, changing policy, changing fiscal positions, but they fail to communicate what they're doing to their stakeholders and to the wider public. And when they do communicate successfully, this is the kind of change you can see. Within 6 months, I'm not going to go through all of this, but let me just talk about what's achievable after 12 months, because I think some of these things are truly inspirational. 1.5 million children more in education within 12 months in Pakistan, right? 200,000 jobs created in Morocco. 500% increase in tax revenue, nothing to do with oil. Really material change that can change the outlook of a country. And if you look at the countries on the right-hand side, purposely stayed away from the UK there, but if you look at the top 3, similar positions to Sri Lanka, and have made real change. So, coming back to communications. If I leave you with one thing today, achieving impact is only really meaningful if you can communicate that change and get into a virtuous loop of change, communicated, understood, leading to more change. So it can be through annual reports, it can be through getting independent bodies to verify the change that's going on. In certain cases, auditors are brought in to audit actual results and independently validate. But most importantly, we need to move away from the more common approaches to actually start thinking about, how do we display our successes? How do we engage citizens to deliver that change? Whether it's social media, whether it be as apps of some sort. How do you measure and communicate perception? Leverage online and social media, and just really get a culture of embracing change. So this is a little bit about what we've seen outside. What does this actually mean for Sri Lanka? Prioritize. It is very important that a small subset of priorities are what you focus on to actually achieve change. Quick wins. As a consultant, we always advocate quick wins because a quick win actually gives you momentum to go after some of the harder things. But in programs of large-scale economic and social change, it is dangerous to only focus on quick wins. You must start thinking about a more balanced approach. Of course, go for the quick wins, gives you the momentum, but have a more balanced approach that also thinks about the large-scale changes that need to take place. Lead by example. This needs no explanation there. Number 5, regular engagement with the public. And again, start thinking about how you engage at different levels, how you engage in the cities, how you engage in a more rural context, and have a more granular engagement plan. Remember the people element. And the last one I think is quite interesting, which is something that you mostly think about in IT, right? Trial and error, the agile approach of developing something. But increasingly, by using methods such as labs, you can actually do trial and error in terms of policy, in terms of implementation. You come up with a set of ideas, you bring it into the lab, you test it, it's no good, turn it around. I've actually seen particular approaches for tourism, actually, where 6 different approaches were tried within 1 week before coming to something that actually led to what was then taken on for the next 5 weeks of the lab and detailed out further to get to like 3-feet plans. That's all I wanted to actually touch on in terms of the presentation. But as I said, if I leave you with a few parting comments as the clock winds down. Think about the priorities. What is it that is most important, and what is it that you're not going to do? Think about the capabilities. Do you have the right leadership in place? If not, how do I get it? It doesn't have to be from within. It can come from outside. It can come from the private sector. It can come from the diaspora. There are many options. Communicate. Make sure that your plan is understood, your roadmap is understood, and your results are clear. Thank you.
Thank you, Danaka. We can now have our second presenter. He is Mr. Sashank Srivastava, Managing Director of WSD Consulting and a former CEO of the Qatar Financial City.
Good morning, everybody. Thank you for the opportunity to address all of you today morning. As you would have noticed, there's a lot of lessons that have been learned from around the world around how to build better institutions, how to execute reforms. What I wanted to do today was to take a very practical example of Qatar, where I had the opportunity to serve for 9 years, and talk about how we actually did it, and really talk you through the practical example rather than theoretical lessons learned. In order to do that, I need to give a little bit of context, because perhaps the Qatar story is not well known. I mean, Qatar is well known in itself, but the story of Qatar is perhaps not told, is not narrated, it's not understood in its fullest extent. The first impression you get when you think about Qatar is that, yes, it's a fabulously rich place, it's got lots of energy resources, and it's sort of vibrant foreign policy, if I may call it that. And that's what it is known for. However, what I wanted to shed light today here was on financial services in particular, but of course, how Qatar has gone about building a knowledge-based economy, even though it's a hydrocarbons story that everybody hears about. So I wanted to give a brief introduction to Qatar and to lay down the grounds for the story of its reforms process across various sectors of the economy. As we all know, that it boasts a very robust economy with the third largest gas reserves on the planet. It is even though it's the third largest reserves of gas, it is the leading exporter of gas on the planet. At current rates of extraction, Qatar can extract for 200 years at current extraction rates. It obviously has one of the highest per capita GDPs in the world. Yet, instead of resting on all of that wealth, it could have very easily taken the route of other energy and resource-rich economies and not done anything more than enjoying the fabulous wealth that it has. However, what it has done is that it has gone about building a knowledge-based, diversified economy, and actually within the space of 10 years, roughly 10 years. The hydrocarbons portion of the GDP is down to around 50%. This number changes and fluctuates quite volatile every year depending upon the energy prices. However, they've still managed to bring it down to around half of the GDP. They've gone about building sustainable industries so that it's not based on entertainment or retail or real estate. It's actually creating very sustainable industries for the long run. There has been a stability and consistency in the reforms process across all sectors of the economy, not just in hydrocarbons or in financial services where I worked, but in other ones as well, which I will touch upon. This is a country which is run by engineers. And that's a very important mindset thing that one needs to understand in terms of the context of how they went about executing the reforms. A lot of countries have a trading mindset. It's a trader mindset. Qatar doesn't have that. So the risk-taking is very scientific-based risk-taking rather than a gambling-based risk-taking. So it results in different outcomes. It results in the way you approach things is extremely different in Qatar. There's been keen focus on the quality of stuff that you do and execute, and not the quantity. because reputation is key. It takes years to build, and it's absolutely irreplaceable. One of the fundamental features that I remember when I first went to Qatar, and the chairman of the Qatar Financial Center was the finance minister, and to lay down the context to the international board members and other people, he said, we want to follow the Boston model, not the Las Vegas model. And I think that underpins the philosophy that Qatar has in terms of executing its reforms and building the institutions and the quality of those institutions that it builds. This is what Qatar used to look like even in the mid-1990s, so only 20 years ago. It had a GDP roughly around less than $10 billion. Population was only 500,000 people. Per capita GDP, of course, was in the $15,000 to $16,000 range, and it had a BBB rating. Fast forward, 21st century. That's what it has done in 20 years. The GDP, of course, is over $200 billion. And that went from $8 billion, less than $10 billion. Now, of course, the population has grown rapidly. Despite that, the per capita GDPs have increased, and it has gone to a AA rating. Now, the point is that, of course, everybody will argue that it's all related with the fabulous gas energy exploitation and the energy that you earn from there. But like I mentioned before, only 50% of the economy is now energy-based. It's actually diversified into other sectors. This is what it has been able to achieve in that time. It's ranked the second most competitive economy in the Middle East. It's ranked the first in terms of financial centers in the Middle East and 20th in the world, top 20 in the world. This is when the QFC, the Qatar Financial Center, was established in 2005, so within 10 years' time. The third most innovative economy in the MENA region and 50th in the world. In terms of talent, second in the Middle East, 24th in the world. Most peaceful in the Middle East, 34th in the world. Second most network-ready economy in the Middle East and 27th in the world. In order to, why am I showing this information is not to in any which way sell Qatar, but the idea is that in order to get to that, there are a lot of countries in the world which are energy rich and have resources, but they haven't achieved this. So why is it that this country has gone about trying to become a competitive economy, trying to actually create all this competitiveness and great systems? Is because the burgeoning economy and the vast growth of economy, the economy doubled in 6 years' time between 2009 and 2015. It puts a lot of pressure. The needs, the imperatives for having robust systems and robust institutions is far greater in an economy that is growing so rapidly and is becoming so rich so quickly, that the imperative is not just in poor countries which are looking for reforms, but also in high-income countries. So how has it gone about doing that? This has been, I'm just looking at 3 sectors over here: hydrocarbons, education, and financial services. There were policy reforms and strategy that was done, and I've taken examples of that. In hydrocarbons, people think it's just about extraction and selling. It actually isn't, and the way Qatar has gone about doing it is very different. They have actually integrated across the value chain of the LNG industry. At the extraction, then they liquefy it down to minus 160 degrees centigrades. They own that, they participate in that. Then it is transported to its markets on LNG ships. These are the biggest ships on the planet, and Qatar has gone about actually controlling that by having the largest fleet. So it's captured the value chain. Once the gas reaches its markets, it's regasified from liquid to gas. Qatar owns those facilities or participates in those facilities. And then when it is distributed, it takes part in the marketing of that as well. On the side of this, it has gone about building a petrochemicals industry. So actually, fiscally, Qatar can sell its gas for free and still make money, because the byproducts of the industry, such as sulfur, are massive industries in themselves. So they have gone about building a petrochemicals industry. Various institutions have been created for that. Qatar Gas Industries Qatar, which looks at petrochemicals. Qatar Petroleum, of course, is the holding company. And these have become areas of excellence and knowledge and capturing all of that. Most importantly, private participation. They never shied away from private participation, whether it's at extraction, at liquefaction, down the road, at regasification, Exxon, Total, Mobil, Shell, etc. And it's an important point to bear in mind, because what could be more strategic asset than gas for this country? And yet they allow foreign participation in that. In fact, the Western countries have been a bit reluctant to allow foreign participation in their strategic assets. So that's how open the policymakers are. I'll skip the next one in the interest of time, but that actually looked at hydrocarbons a little bit more in detail. The reason I've been talking about that instead of financial services is to emphasize the well thought out strategy and the reforms and the institution building that the country has undertaken. Financial services landscape. This is what it looked like before the Qatar Financial Center was set up. There was a central bank. Qatar Exchange, which is the stock market, was a self-regulating body. There was no securities. There was no securities regulator. And of course, the Ministry of Finance, which looked after insurance. But let me put a little bit more color on this. Insurance regulations, before the QFC was set up, was about 20 pages long. They were written in the 1960s. They gave capital adequacy in Indian rupees, because Indian rupee was the currency in the Gulf countries before those countries became independent. And it had not been updated. Similarly, you found across the system, you had antiquated regulations which could not keep pace with the growing needs of the economy. Fast forward 10 years, it's ranked 20 out of 82 countries in the Global Financial Centers Index. Various regulatory bodies, institutions had been created by that time. The roles had been defined very clearly, and the industry participation, again, you went from having a couple of banks down to having 348 licensed firms, 91 of them regulated firms within a span of 10 years' time. Importantly, coordinating mechanisms, because things quite often work in very siloed manner. So they did away with all of that by creating mechanisms such as the Financial Stability Committee and the Economic Affairs Committee. One point to note here is Qatar Investment Authority. Qatar Investment Authority was actually only established in 2004. It's not a very old institution. Coming to Qatar Financial Center. So when they looked across the landscape of financial services, what they realized was, A, the regulations were very antiquated. They could not cater to and meet with the needs of a modern economy. More importantly, the legal environment itself was so antiquated and not prepared. So you could not set up special purpose vehicles. Nobody in the country had heard of protected cell companies. Nobody in the country knew how to create trust companies for financial services, etc. So the policymakers, the way they looked at it was, right, we are going to create a policy lab. We are going to create a one country, two systems the way China has it. It's not going to be a free zone. They're going to create it onshore. It's not going to be a tax haven. So that was extremely important. That's the engineering mindset of actually trying to do the right things. Not be tax haven, focus on quality, try and do the right thing. So these were the institutions that were created. The important thing is that these institutions were created and authorized and given the powers to actually make those regulations, make those changes. The governance was very clearly defined. There is no cross-pollination in the boards of these various entities. They are all independent. Each one in turn reports into the Council of Ministers, which is the highest lawmaking body in the country. If you create a legal environment, and the legal environment in Qatar and most of the Gulf countries is actually quite interesting. It's Sharia law for personal, but it's Napoleonic Egyptian law for civil and commercial matters. No, and it's all in Arabic, so nobody can understand it, or it's very difficult to do business in that environment. So they actually created an English law based, they did not copy wholesale the English law, the English common law based legal environment was created from scratch. Employment, immigration, contracts, you name it. The entire paraphernalia of legal environment was created. If you do that, they very quickly realized that you actually need special courts who specialize in these kind of things. And they were not at all reluctant to actually create special courts and give them the powers to actually make judgments and carry on the process very fast. So I have actually run out of time. So I'm going to leave the floor now and leave it for other questions that you might have and try and address those at a later stage. Thank you.
Thank you, Shang. Can we ask Dilan to start his presentation?
Good morning. This morning I'm actually addressing you in my capacity as the newly appointed chairman of the Public-Private Partnership Agency, as I'm told it's going to be called, and hopefully quite temporarily its acting CEO. I've been less than 2 days in my position, as there has been somewhat of a transitional bottleneck, which I don't want to go into details on. So I'm not going to make any earth-shattering revelations, but try and build a perspective amongst you, the captains of the private sector, on possibly some initiatives I will take in executing reforms and building a PPP institution, which is really the theme of this session. Now, PPPs, what does it entail and what is it going to cover? The Chamber of Commerce has in fact defined PPPs as new projects in which the private sector has a long-term controlling interest in the project, with the government having the role of some part of ownership, financial support or regulation, or the provision of land on lease, and it is usually governed by a specialized agreement. What a PPP is not, according to the Ceylon Chamber, is construction contracts and the sale or lease of land. Now, I'd like to slightly finesse that definition because, when I met the Prime Minister yesterday, he specifically asked me, make your own definition and pretty much chart a course that would adapt the definition to today's realities. And my definition is pretty much new investments or capital formation in PPP type, whether it's infrastructure or what have you, and the transfer of ownership or lease of dead or unproductive government assets on a new business model. And both these aspects would be governed by a complex, what we call concession agreement, which is that special PPP agreement that I spoke about earlier. So therefore, by definition, privatization is not part of my mandate. So just to give you an example of what my mandate might include would be obviously power projects, toll roads, new container terminal. These are examples of new capital formation in PPP projects. The second example of dead assets of the government to be transferred to the private sector on a new business model, I can cite a project that I was involved with, which was SAGT, which was Queen Elizabeth Quay, hardly producing any economic return to the country, which is now producing significant returns as a PPP operated by John Keels and P&O. Hambantota is certainly a PPP. It's a dead asset transferred under a new business model. And possibly, if you look at maybe another example is the Hyatt Hotel, which I believe is a dead asset at the moment. Honorable Kabir Hashim is not here today. But certainly Hilton is not. Hilton will be a privatization because it's an operating asset. Just to place PPPs in its context, Mano and I were colleagues when we were much younger in public service, where he was the Director General of the Privatization Commission, which was called PERC, Public Enterprises Reform Commission, on which I was ex officio on the board as the then chairman of the BOI. And to complement the Board of Investment and PERC, there was another institution called the Private Sector Infrastructure Development Company, PSIDC, where donor funding was given to PSIDC to create a long-term financing instrument to support privatizations and PPP projects. So these three agencies had common boards, were run by private sector professionals, and worked hand in glove. And that is why we saw during the period 1996 to 2001 a plethora of privatizations and PPP projects being implemented, including the biggest ever privatization at the time, which was Sri Lanka Telecom, and the biggest ever PPP, and the first ever in the port sector in South Asia, SAGT. In terms of, these are lessons learned which I hopefully can apply in my second innings, so to speak. Another aspect that succeeded in PPPs, originally the PPP unit of the government in 94-95 was within the Ministry of Finance. And when I was invited to set it up under the Board of Investment, I managed somehow to obtain blanket approval to hire staff on market rates. So the first Deputy Director General of the PPP unit, which was called the Bureau of Infrastructure Investment, was paid a salary of 100,000 rupees then, which I did a quick inflation-adjusted calculation to today. That works out to about 750,000 rupees today, even though it is still below market. Second thing that worked for me was USAID, the US government agency, allocated a $2 million grant funding line so that the BII was able to hire top international consultants and professionals to support the line ministry concerned. And thirdly, what succeeded was that the Board of Investment Board was staffed. Board of Investment Board comprised the right sort of people. 3 top secretaries, including the Secretary of Finance, who acted as a buffer and a policy-making body. One aspect I have to mention about the staff, when the staff were recruited, they were recruited on contract basis. So they left their jobs, joined the public sector, and I was able to hire and fire them, which we cannot do in the private sector. But they still came. 1 in 5, I would reckon, I did have to terminate. So it was a performance-based culture was created. But some of the people I fired, they're still my friends, they gained from the experience and moved on to bigger and better things. So with these ingredients, what did we achieve? During a time of war, when we had what I call country risk, a war risk, insurance premiums, etc., we financially closed $800 million worth of PPP projects. If you were to inflation adjust it to today, it's almost $2 billion. A case study was SAGT, where it was to be funded with Japanese funding as a public investment project. When the private investment proposal landed on our table, we found that on a cost per TEU basis, the public investment project was 2.5 times that of the private investment project. So it was a case study. We then went on to implement Sri Lanka's first ever power project on a PPP basis and completely financially closed 400 megawatts of thermal power during the time. The first ever mini hydro was structured by this small team of people who were in their 20s and 30s at the time. The Lankabel and Suntel were again quasi-PPPs because they were governed by certain regulatory and a special type of BOI agreement, and it created competition within the fixed telephony system. IT, the ICT sector received special attention of the PPP unit, and there were several things that were done, amongst which one was the declaration of Malabe as the IT zone, and a special land-based PPP type structure for Millennium Information Technology to build their campus in Malabe. And we can call it a PPP, but technically it's not. The creation of SLIIT, today Sri Lanka's largest IT and engineering university, to which the Board of Investment gave its first seed capital because no government agency nor treasury wanted to fund it. So I went to my board. Thankfully, as I mentioned, I had a very dynamic board, and we gave them 30 million rupees to start in rented premises as a grant. If that were to be valued today as a business, even though SLIIT runs as a not-for-profit, it would be worth 6 billion rupees, because today SLIT employs 8,500 people and banks about 400 million rupees in cash, not for profit. So Another simple PPP structure. Virtusa wanted to set up in the country. I signed the BOI agreement somewhere in 97. They said we need high bandwidth. So I got treasury funding, laid a fiber optic cable entirely through the WTC, and that is where Virtusa started their business. So the initial IT industry, export-oriented IT industry started at the WTC. In 1996, I still remember IT exports were only $3 million. If there is one star in our economy over the last 20 years which has grown at roughly 20% compound annual, it's the IT industry, and that is because from the privatization of telecom, from the creation of SLIT, from the creation of the right taxation environment, including the elimination of duties from laptops, from computers, telecoms, etc. That is what created the foundation. So it's now up to me to figure out what's the next wave of ICT. Sri Lanka's largest ever middle-income housing projects were created by the BII. And there again, there were two large parcels of land, Millennium City Aturugiriya and Nivasipura Ekala. The RFP, the request for proposal document, here's where the creativity comes in. The RFP was issued to commercial banks, not to developers. Why? Because we told the commercial banks in 1996 or 97, you pick the developer that you want to finance, but we are giving you the RFPs because we want you to create a mortgage industry. The mortgage industry was a fraction of what it was today. I believe that these two projects, where there are now probably 3,000 houses being built, had a role to play in developing the mortgage industry in our country. So let me come to the present in my last 5 minutes or 6 minutes. So what I intend on doing is creating a brain trust of professionals to do PPP projects to meet the current imperatives of the country and, at the moment. And that brain trust would include, hopefully, investment bankers, economic researchers, top negotiators. When I handpicked the head of the BII in 1996, unfortunately he's not here today, but I'd like to mention him by name because he did a fantastic job, Mr. Mano Nanakara. I picked him because of his Trump-like negotiating skills, but now Trump is proving to be a lousy negotiator. But nevertheless, he was the best negotiator that I have ever worked with, apart from his financial brain. So it is crucial that we negotiate the right type of deal for the country. So what I hope to do is create this multi-skilled team, working with the line ministry, plus external consultants, with the PPP unit hopefully being the catalyst. So I am looking for a new CEO, but unfortunately, Cabinet has approved at least some months ago only 350,000 rupees for the CEO. So if any one of you have sufficient wealth to come and lend me your services, I'm quite open because I am looking for someone with actual ability to close transactions and not really someone to warm his seat and earn 350,000 rupees and do whatever else. The second thing I need, which I'm told I have, is funding. So the government has allocated 100 million rupees to get this thing going. The World Bank is coming with an $800 million grant funding for a resident advisor and a resident company to advise on various aspects. A $25 million IBRD long-term loan to strengthen the framework, to also fund some pilot PPP projects and to procure technical assistance. So the ingredients are largely in place. So what I hope to do to succeed, hopefully, is to provide this value-added facilitation service to the line ministry, to strategize, to structure, to negotiate, and the most important aspect, to close these transactions. Because without the ability to close transactions, I always used to say this as a former investment banker, the art of investment banking is in the art of closing a particular transaction. So very quickly to conclude, there is some confusion whether the PPP is going to be a unit within the finance ministry or a national agency for public-private partnership. Yes, eventually I believe that we need to create institutional capacity, but I have some immediate priorities, and that is to appoint a board of directors, a board of advisors, which I believe will primarily comprise of ministry secretaries within ministries where there's a pipeline of PPP projects. I want to prioritize, I want to look at the pipeline and prioritize the projects that I want to do, and it was spoken of earlier, some quick wins is absolutely crucial. I want to get the guidelines and the templates approved through the system, but I want to have, rather than producing, there is a draft 30-page guideline document produced by USAID that needs to undergo some revision, but I want to get a short term, within 1 month, cabinet approval, I'm hoping to at least get the basic guidelines out of the way, and then over the next 3 months or so, hopefully the guidelines through the national, get them implemented through the national procurement guidelines, and then eventually, hopefully, there will be a law governing PPPs. I want to also work with the existing resources we have by forging linkages with the Board of Investment, Megapolis Ministry, etc. Work with external transaction advisors. Some investment bankers here, you might get some work coming your way. A panel of legal advisors, both overseas and locally, because there are some transactions which are extremely complex. In fact, SAGT and Port City and CICT, all of them secured external legal advice, working very closely, obviously, with the Attorney General's Department. I want to also create the research and analytical capability to cast a relatively wider net to capture PPP projects. And some of the sectors, I've sort of planned to look at 10 sectors, though I don't want to spread myself too thin. So the priority would be the transport infrastructure, utilities, ports, tourism, construction covering affordable housing, healthcare, etc., IT. It was spoken about e-procurement. I mean, I will look at working closely with the ICTA to see what are the projects that we can fast track, because if there's any way that we can function as an efficient government, it is through ICT. If I have the time, the resources, etc., I'd like to look at PPPs in agribusiness, the mining and mineral sector. Why is this sector being neglected for the last 20 years? We have a phosphate mine that can, in fact, not only meet entirety of Sri Lanka's fertilizer needs, but export hundreds of millions of dollars of fertilizer over the next 200 years or so. We are just staring at it and doing nothing. We have graphite, we have titanium, nothing has happened. So I'm hoping that I'll have the backing of the policymakers to start looking at the mineral sector, financial services, logistics. So in a nutshell, I'm hoping that PPPs would act as a catalyst of economic growth, combined with some of the public investment projects that are being planned, such as the Central Expressway. In 1996, when the BII was set up, I set out to focus on 5 large projects that would actually generate confidence, as you said, Kanaka, earlier. And these 5 large projects were very much under implementation by 1999. And 1999, if you look at the statistics, Professor Hausman's statistics I looked at, and I'm happy to say this, I'm not trying to brag about it, but this is kudos to the team at the time. The highest net FDI, which takes out loans and FDI computations by reinvesting retained earnings. The highest net FDI as a percentage of GDP since 1978 was recorded in 1999. And that year, 7.9% GDP growth. Sad to say that $200 million was the equity FDI in 1999, and I'm told that the equity FDI, this is the net figure, in 2016 was only $300 million. So there's a lot to be done. What is the project pipeline? One more minute. From what I know, as I told you, I'm 2 days on the job. The elevated highway from the New Kalini Bridge to Aturugiriya, the Asian Development Bank is a transaction advisor. There's an underground tunnel plan to extend the Marine Drive, thankfully not impacting on Golf Face. It will go underground and connect with the Port City access and the elevated highway to the airport. That's been structured as a PPP. Inland water-based transport, inland air transport, LRC, some utility projects in water, waste to energy, ports, industrial zone. One final comment on solicited versus unsolicited proposals. During my entire 5 years, we did not entertain a single unsolicited proposal. So please, private sector, if you have an unsolicited proposal, just send me the concept. I'll figure out what to do with it. I know unsolicited proposals have a role to play, but the government does have a policy of, at the moment, implementing unsolicited proposals through the Swiss challenge method, which I have some concerns about. Finally, nevertheless, I'm quite happy to be re-invited again by the government 20 years after, or 21 I think, after I set up the BII. What I'm sad about, frankly, is that the BII is defunct. There is no institutional capacity. There is no single point of reference for investors to talk about PPP projects. They have to go from line ministry to line ministry. Having said that, I will try and spend as much time as I possibly can. In final comment is that Sri Lanka has what it takes to do PPPs, complex PPPs. We have only five, but they are significant. There are 5 PPP, what I call PPPs, that are over $200 million in investment that are already operating. Number 1 would be SAGT, then we have CICT. I believe the Tata construction project is also a PPP because that involves slum resettlement. We have Port City. With the chamber, I would very much value your wise counsel. Thank you very much.
Thank you, Thilan. We have about half an hour for our Q&A session. We have a couple of questions that have come through, but I would like to start with a comment to Ganaka, if I may, and maybe Thilan can add on to that. I mean, we all know FDI has been slow. That's a fact. It has been slow even if you take last year in comparison. It has been definitely slow when you take, as Thilan pointed out, real figures over a decade or so. Now, my comment is, or the question is, are we expecting too much to Ganaka, too soon? And what do you think? I know you do some work with the government, but without sort of revealing anything that you shouldn't reveal. What, in your opinion, are the major bottlenecks?
Well, first of all, I don't think we're expecting too much. I think, if at all, our expectations should be higher. In terms of the challenges, I think the challenges are twofold. With any FDI program, you have 2 parts. One is the actual funnel, on what's moving through the funnel, and what comes into the funnel. I think a lot of work has been done in Sri Lanka to actually think about the funnel through the different committees that are there today. More work needs to be done, but the process is getting better. So through committees like the single window and through the facilitation committee, through new templates, new processes that have been put in place, that flow through is getting faster, but as with anything, it can be better. More importantly, though, as you think through how you get FDI to come into the country, as with anything, targeting and prioritization is important. Just saying we want FDI doesn't, that is not good enough. You want to actually think about 2 things. One, where is it that you want FDI and why should it come to you? And you want to actually identify your counterparty and think about how you exactly go to that counterparty and solicit the FDI. Interestingly, we are seeing new arrangements which are, rather than a very point-to-point contact, so country-to-company level FDI, where particular companies are targeted and identified, and institutions such as the BOI would actually work to say, look, would you like to come and invest here? Here's all of the reasons why the necessary factors are in place for you. That level of targeting yields a much higher level of FDI and a much higher quality of FDI as well. So I think Sri Lanka needs to actually think about both these angles. The aspiration is good, could be higher, fix the pipeline so that things flow through faster, but also start thinking about how you get better quality FDI into the pipeline.
Thank you. There are 2 questions here that have come through the system, which I will combine. This is probably for Shashank. The first one is, how did Qatar, from having a CAGR of roughly 10% in 1990-2015, double its GDP in just 1 year? I wonder whether that's accurate. And the next one is, did the people attitude or politicians' attitude which made the changes? I mean, generally.
Yeah, on these, sorry, can you hear me? I'm not sure on the statistical side what was the question. The GDP doubled between 2009 and 2015. It's a 6-year period. if you look at it from the mid-90s, the idea of the slide was to look at from the mid-90s down through to the mid-2010s, in which case it went from being less than $10 billion economy to being a $200 billion economy. So, I mean, I'm not sure how else to respond on the statistical side of things. The idea of that was to actually illustrate the complexity and how fast the pace of growth was, while still the country had embarked on a reform process, which made it still one of the most highly competitive countries on the planet. Sorry, and the second question?
No, I mean, the second question was basically the attitude of politicians and how the public reacted to some of these reforms. Particularly, I would like to draw attention to the fact that you refer to legal reforms. This will be interesting because even in Sri Lanka, there are some rather archaic laws which have to be reformed. In Qatar, it may have been a different story, but that's an interesting perspective. Would like to hear on how that was set about.
Yes, in fact, just because I ran out of time, so I was not able to link all the parts of my story into the presentation. In terms of the policymakers and the politicians and the decision makers' view on things, it was actually colored by the experience they had on the hydrocarbon side. So they had already dealt with creating and owning the LNG chain, in which they had dealt with foreign partners, right from the beginning, correct? They had dealt with in the international markets. In fact, in the mid-90s, they borrowed, they were a BBB rated economy, they borrowed from the international markets at absolutely usurious rates, right? So they knew what the investors need, what is required, correct? So that already colored. Now the decision-making process, of course, is much more streamlined as compared to the democratic setup. So that sort of helps. But there was a lot of resistance within the country which had to be overcome, and a lot of it had to do with communication, which everybody's been talking about. The one other important point, which perhaps not come out, is that the buy-in of the local industry. Now that is extremely important. When Qatar Financial Center was created, as I mentioned, you have an entirely new legal environment, regulatory environment. If the local industry did not feel that it was going to benefit from it, right, then there was not going to be any which ways that you could actually execute it. So it was done in partnership with the local industry. In fact, roughly around 40% of the QFC licensed firms are local firms who use that environment to add new lines of businesses, to actually use that as a platform to grow outside of Qatar. So you have to understand it's a platform. It's not only for foreigners to come into the country. It's also for the domestic industry to use that excellent platform to go outside, right? So it works both ways. It's a gateway which works both ways, right? So the local industry has to be a part and parcel of your reform process, and they have to be communicated and made to understand that this is for their benefit. It's not just something that you open up for foreigners.
Okay, I'd like to shift a little bit here again, a sort of a question that has come through. We all face this, the private sector and certainly the government does. A lack of suitably qualified workforce is considered a major setback. Is the government, we have today Mr. Hittiarachi here with us, who is the Secretary Education, and he's no stranger to reform because he was involved in a major reform project in the pensions department, and this is a new role he has taken. I would like to ask Mr. Hittiarachi, how is the government addressing this, particularly oriented towards vocational training, and we heard in the morning today that this is important to target our resources. And the human resource aspect, though we talk about it quite a lot, in my view is poorly targeted. And that is a problem that the private sector is having.
Thank you, Mano, that when I listened to the presentation, I have questioned myself that I am in the right process of preparing the people to match with your demand. So certainly, we have failed some areas. Because of that, the present government is planning to have a rigorous reforms in the education sector, especially right now that nearly 120,000 people after doing O-level are adding the market without any skills. That is facing by the business people facing that without skillful people not there. Even after doing A-level, there are nearly 130,000 people are not qualified for the going for the further education. That those 200,000 people are so without skillful. That it is affected your industry, your investment. When you heard this presentation, I don't know that enough skilled people to manage the new economic trend in Sri Lanka. Therefore, ministry is fully pledged to introduce vocational education system to our education in 2019. Now we are planning to do that. We are going to introduce 26 new subjects in relation with the new economic demand in the Sri Lanka. That is the way. So this is even right now, our education is not that much quality oriented. So we are also introducing the inspectorate, especially I think those days there's a school inspectoration, now it is not there. So we are going to introduce same to develop the quality people and quality education system to new match with the new trends in the education, new trends in the economy.
Just add something. I think on the education side, there are a lot of very innovative examples globally that we can turn to. If I just think of two, one is this approach of boot camps, where today we think of education as a long-term investment. The idea of a boot camp is essentially to say, private sector, come and tell us what skills you need. Let me take a tangible example, tourism, for example. This would mean that, and I'm just using an example, Atkins, Penn, Keels, and Co. would come together and say, we need 100,000 trained hospitality staff. You would then put together a 16-week program that caters to train people to deliver what you want. When they come out of that program, you hire them. So Keels will hire them, Atkins Spence will hire them. And therefore, you get into a virtuous cycle. These people are not investing in skills that they come out and are looking for a job. They know that there is a job at the end of it. They know why they're getting into it. And in 16 weeks, you train them. It's very successfully being done in countries like Malaysia. The other approach is challenge that Tilan was talking about when we think about delivery. We must start thinking about how we look outside for talent and how we leverage the private sector, either through secondments, through actually paying market rates, to bring in the quality that you need to deliver on our objectives. And finally, one point, I was recently stunned. I was attending a seminar on education where we were looking at 60% of the world's jobs have some element that is going to get automated away through either advanced analytics, robotics, or so on. Around 30% of us face complete redundancy over the next 20 years. When you think about that, you actually have to rethink what the education system is going to be at a much more fundamental level than we, I think, are ready to even thinking about today. So, something to think about.
Yes, well, there's a question here. I'll go with that first. I think probably Tiran can start with this. There are no proper investment banks in Sri Lanka. We have banks which are highly risk-averse and adversely impact innovative startups and SMEs. Can you do something similar to what you stated about kickstarting the mortgage market?
There are some
The act is a commercial banker, we better be careful how we answer this.
So I'm certainly not delving into his area of expertise. I think the issues facing the mortgage industry more has to do with supply side factors, because if the banks cannot lend at certain interest rates, that's a more macroeconomic issue. One way, okay, leaving that aside, because I'm not, I have only a bachelor's degree in economics. I think in order to create a more robust home ownership industry is more of more the priority, where if the government can release its unproductive lands, looking at the megapolis plan in the right locations, not focusing on land price maximization, but focusing on hitting certain price points that are affordable within the context of the current economy, and hopefully with better fiscal management, banks can lend at lower interest rates, hopefully single digit mortgage rates, which I got when I first looked at buying a house, and now I believe it's double digit. Am I not correct? Because you know, in the US or wherever skilled people are migrating, they can own a house within the first 2 or 3 years of graduating from a university because their mortgage rate would be 3.5%. So there are a whole host of other factors that come into play. Just one more mistake I made in my speech. Actually, the biggest single foreign direct investment is actually Port City. It was bigger than the 1.12 billion I mentioned. It's $1.4 billion, but it's going in to create a new asset, whereas Hambantota is an existing asset being leased on a long-term basis, and that money hopefully will go to retire the Sri Lanka Ports Authority debt, and that becomes then a viable business going forward.
Okay, I have a comment here on PPPs, Thilan. You know, I mean, most, if not all PPPs, have to be on a risk and return basis, you know, for both the government as well as the private sector partner. But in Sri Lanka, sometimes, most times recently, it appears that the governments are looking to engage on the basis that a disproportionate risk is heaped on the private sector partner. Is this what is still observed here? And if it's the case, how can it be rectified? Particularly with relation to land. You know, we've had this problem perennially, where if the government becomes a public PPP partner, you know, there is a huge controversy, particularly when it comes to land, as to what price these lands are transferred and whether the government actually really is participating and doing their bit on a risk and reward basis.
Yes, two parts to that question. The real challenge in a PPP structure is the equitable risk allocation between the public sector and the private sector. That is really the art of doing the right sort of PPP that doesn't get renegotiated or fail over a period of time. I mean, I'm happy to say that some of the PPPs that the government has embarked on, most have withstood the test of time without any renegotiation, whereas one or two, for example, Port City, was renegotiated, but nevertheless, it was a very amicable renegotiation and the project has recommenced. So I don't entirely agree that there is a conscious effort of piling the entire risk on the private sector, because the private sector also cannot be foolish and take inordinate risks, because if the process is transparent, on the matter of land, I've been saying this for many years, even in my previous incarnation in public service, that land should be looked at as an instrument to unlock economic value, but not as an instrument to maximize revenue to the state. That is the fundamental principle under which that we looked when in the late 90s, when we brought in Apollo Hospital, when we brought in Millennium Information Technology in Malabar, when about 4 or 5 other hospitals were built, Millennium City and certain housing projects were built. The government moved away from the principle of land price maximization today. In other words, the chief valuer's valuation in some of these projects, the private investors were able to pay the chief valuer's valuation over a period of time. So there's a structuring element that's involved when it comes to the matter of land. But apart from that, it is a decision for the cabinet or the CCEM to make. So if we are clever about the valuation principles governing land, we can unlock so much economic activity, not just in the so-called construction sector, but in agribusiness. I mean, when I was once upon a time, I was doing a survey when I was managing director of Forbes and Walker. I got a land survey done through some retired officials. There are 300,000 acres, and at that time, Mattala Airport wasn't there. It was meant to be for agriculture. 300,000 acres of what are called degenerated lands. Degenerated means 95% of the forest cover was destroyed, generating absolutely no economic value to the country. And I'm quite confident that 2/3 of it is still around in Monragal, Ampara, Polonnaru, etc. districts.
Okay, thank you, Thilan. Let us welcome the Honorable Minister who is joined us to grace this occasion. And since he's come after a cabinet meeting, we can straight away put him in the hot seat. Just to find out, Honorable Minister, the status of the Public Enterprise Board. I know you personally have championed this through your ministry, and it's a very, if I may add my personal comment, it's a very laudable effort. But we are a little bit disappointed that it has taken a long time. Can you enlighten this audience, because we are talking about major state enterprises, what the status is?
Well, you can come and try sitting in my office and seeing how the bureaucracy works. It's nothing to do with government, it's all to do with bureaucracy, because the Public Enterprise Board paper was formulated, a draft was done, and the Prime Minister personally led the program. He wanted it fast-tracked. Now it's gone to such a long process. It goes to the Legal Draftsman's Department, the Attorney General's Department, etc., 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 and we're still waiting for them to approve the initial draft for it to come back. And then from there, my ministry has to then take it back to Parliament, put it in the order paper, 3 months' time given again for the public to raise any objections, and then it's ready to be debated. So it's following the process. But we are not waiting for the Public Enterprise Board to be officially instituted. We are doing the reforms. We have a group of consultants who are working with the ministry. We have volunteers who are working with us. We're getting experts to help us, and we are working on restructuring. We have developed KPIs. We have looked at Temasek and Khazanah from Singapore and Malaysia. We are looking at how they went ahead. We are looking at China. We were on a visit to China, looked at state-owned enterprise restructuring. They've done 650 public-private partnerships in the last year. So we're looking at a lot of other countries emulating some of the good things and going ahead.
Thank you. On a related subject, you know, our topic is partially making more efficient large enterprises today. I read somewhere that the SOEs, at least the major state-owned enterprises, account for around 14% of government debt, give or take a few. Sri Lankan Airlines accounts for about 4%, and I won't ask you about Sri Lankan Airlines because we are quite educated by looking at the press. But basically, are you concerned that some of these enterprises are using government debt merely to cover up operational losses still? Because it's not a bad idea raising debt, particularly if they are raised for development, capital expenditure, etc. But all of us know that some of these enterprises are sort of financing their revenue shortages or their income shortages or their profitability shortages by debt. Is that an area of concern for you, Minister?
Yes, it is an area of concern. Yeah, there are state-owned enterprises which, due to poor management, also lack of financial discipline, politicization, etc., those institutions are raking up large losses on account of mismanagement. That's one thing. But you got to also understand that all state-owned enterprises are not there to only make profit. They also have a social role. If you take the transport sector, you can't make it profitable if you're trying to service the rural roads, etc. So you need to have a payoff, government subsidy or something. But the question is whether the loss is coming on account of the social role it plays or whether it's coming on top of the mismanagement. I think it's more coming off mismanagement. That's where we need to look at it. So being the Minister of State-Owned Enterprises, I don't have all the state-owned enterprises under my purview, like the CEB and the CPC, the larger monsters are not with me, thank God. But I think Sri Lankan Airlines compensates for all of that. So, however, we are managing, but what I would say is, I don't believe in privatization in the real sense. There's one example in Chicago when the garbage collection program was outsourced to a private company rather than the municipality or whatever the local government in Chicago, it became messed up. And the Chicago local government took it back. They applied, they tendered and won the tender, and they did it more efficiently. It's just one example of where the state can also be competitive. So we are thinking of public-private partnerships wherever to professionalize the management. That's one of the key models we are looking at. Even Sri Lankan, we are looking at management. We are looking at professional management where the state might have a stake yet, an equity stake, but the state should not be involved in managing. Some of the less strategic investments, yeah, of course we want to get out of it. We shouldn't be running hospitals and hotels. I mean, that's crazy. But, you know, there are some key areas that the state has to be in it, and we will play that role. But as Mano's question, whether these are being, the losses are being raked up because of certain reasons, yes. So that is, the process is not easy. You have to understand, we have to first politically survive to make the changes. So we are not going to make any changes to get ourselves kicked out of government. We are taking our time, but the job is getting done slowly but steadily.
Thank you, Minister, for that frank reply. Maybe this is to Thilan as well, but I mean, anybody can come in. You know, regulation has always been an issue. We have made some strides in areas like telecom, but a lot more need to be done. You remember the public, what was it called? The public regulatory board, I think, which decided on, supposed to decide on electricity prices, etc., was set up many years ago, but then I think there's a lot of work there that has to be done. Now, regulation, in my opinion, will be critical if you particularly want to get FDI as well as investment into the public-private partnerships. Because the private sector, being a major partner, would require continuity and some certainty in terms of pricing structures, in terms of tax structures, in terms of other aspects that affect the viability of the project. And the consumers, on the other hand, as the Honorable Minister said, will demand efficient service. Do you think it's a critical factor, and do you think that action has to be taken to maybe give more teeth to these regulators and also get the regulators to work in accordance with our growth strategies?
Regulation has to be implemented with a very, very fine balance, because the problem is under-regulation and over-regulation, both are bad by definition. You have had situations like in the case of governments. I'm not a politician, but I have seen examples of poor regulations and then the pendulum swinging to the other end where the agency concerns wants to over-regulate. Case in point, when a plethora of new stockbrokers were given licenses, and then we sit back and say, oh my God, we've created the pump and dump scheme. That was the reason. The board of the Colombo Stock Exchange should re-examine themselves why so many licenses were given. Then basically you have certain unethical activities that were going on, and then there's talk of further regulation and over-regulation. You know, so we must not have that pendulum swings this way, that way. I like the Frisbee story, so the Frisbee story can be applied there. But in the case where there is some level of possibly certain regulatory reforms required, would be maybe in the port sector, because if you look at, you have the Jaya container terminals, which are owned by the port. You have SAGT, you have CICT, East Terminal, West Terminal. Potentially, there must be an equal way in which that the state-owned terminals and the private sector terminals should compete. So SLPA could potentially be the regulator, and all the terminals, I mean, even if it's owned by the government, including 100% in the case of Jaya container terminals, could operate more as private sector enterprises so that they can perform at an equal level of the private enterprises. So, as I was mentioning earlier, I think Sri Lanka has enough laws, frankly. We should be looking at really taking statutes off our books, but making the laws flexible enough so that that fine balance between regulation and investment, so that they do not impede investment.
I'm sorry, I seem to have a habit of barging into everything, but this was, when you talked about public utilities, regulatory commissions, etc., I thought it was important to tell you my experience with the electricity, the power sector. I think one of the biggest problems is there is a huge mafia in most of our sectors. I'm going to be upfront because I think one of the things we need to do is be competitive. Competitive in terms of financial costs, in terms of manufacturing and production costs. One of the key production costs are electricity, other than labor, etc. now. And I think we are one of the highest in the region. And we are paying a price because we are inefficient. And this regulatory commission cannot penetrate the CEB because right now we are paying high rates for, we are buying power at enormous rates. And there are new technologies, we can cut the rates by half. Cost of electricity, there are people willing to provide it, but it's not happening, right? That's, as Tilan said, that's quite right. We have too much of regulations, controls that protect some of the inefficient systems. And we need to break away from this if you're going to make a change. I've seen this where the Prime Minister has tried to clear through some of these hurdles, but the systems are so rigid, it's difficult sometimes, even at the highest level, to get through. But unless we do it, I don't think Sri Lanka is going to be competitive. So it's essential that more people get involved in trying to make the change.
Thank you.
I just wanted to add on the regulatory point. Perhaps I just wanted to share the experience that we had in Qatar in terms of designing good regulations. So as you can imagine, QFC was set up the law was passed in 2005, people started coming on board in 2006, and 2008 you had a massive global financial crisis. So it was great timing. Now if you could understand the reaction from on the regulatory side, around the world the pendulum swung to being over-regulated. And if we went down that road in Qatar, we wouldn't have a financial services industry. So how do you make sure, from a governance perspective, the way we did that over there was to make sure that all the no regulations were formed or even currently are formed in a vacuum or in a dark room and then just published and said the industry has to follow that. It doesn't work like that. The regulation formation process itself is a consultative process. So there's extensive engagement with the industry, with the law firms, with the government entities. It's actually put up for public consultation and anybody in the public can look at it and give comments back. You take all of that, you make your changes, make it appropriate so that you're not going to kill the industry that you're trying to regulate. Make it appropriate, and then when you go for your approval process, even at that point in time, you get international people to do a sense check on it, that whether you're going in the right direction or not. Having done all of that, you would still get it wrong, in which case you need to have the flexibility built into the systems itself to adapt and change and react very quickly. So that's where I think everybody was talking about feedback mechanisms. You can have a feedback mechanism, but what do you do with the feedback? You need to have a system by which you can change and adapt extremely quickly. So that was the way we did that. We did it over there. So.
Thank you. In the interest of time, we'll just take two more questions. There is a question to Ganaka. Maybe I'll ask Ganaka that and then pass it on to the minister as well. It says currently there are strikes or riots in Colombo virtually every day. What's your advice to government about the civil unrest over its way forward?
Way outside my area of expertise, so I'm just going to leave that one.
I'm sure that the question was directed before the minister came. You might as well give your advice now.
I have no advice to give on that topic, I'm sorry.
I think communication. Mano, if you remember right, when we privatized Sri Lanka Telecom, we were part of a team, right? Starting from the minister, all of us, we were put in the deep end and say, go defend this transaction. Minister actually sent letters to the wives of the telecom workers. Mano and I were on live television channels answering question, I may labadayak samagam pudgalikarana karan. I mean, we had to figure out answers why profitable enterprises should be privatized. So there was actually right at the outset of planning a particular set of reforms, whether it is what to do with SITEM, whether it's what to do with whatever else, let us look at a proper communication program and properly implement it, because otherwise reform's going to fail.
Well, if this question was asked from the previous government, I was wondering what they would say. The answer would have been white vans. So in our case, it's different. It's Yahapalane, so you need to do this right way. I think Tilan was spot on. Communications, we lack communication. Some of the good things we've done is not being communicated. People think the government is not doing anything. There's a whole lot of work if you really look at what we've done. So I think we need to also tell people beforehand what we are doing. The selling point. For example, the Hambantota port. I mean, the CPC union has absolutely nothing to do with the Hambantota port, and they are going on strike. This is policy, and unions have no right to go on strike on government policy. So it's also the information to the public about what's happening. Number two, that the government has got to be stronger, stay the course, to be strong on decisions, not waver on decisions. I think some of that, if you pull through hard decisions and stay the course, I think most of this will stop. Another thing is that the government has to exercise the law. We are not even exercising the law because some of these protests are not legal. So I think we need to take right measures and be stronger. Right now, we've adopted that course and we've just started, I think, steering the ship in the right direction.
Thank you. Finally, today in the morning, particularly on Minister, you were not here. The governor, we had excellent presentations in the morning and even in this session. The governor ended his presentation with a fervent call to the private sector, saying, look through these protests, these confusions, these distractions and these smoke screens, and look through that and make your decisions wisely and invest in Sri Lanka. That was the sort of message that the governor gave after giving a very eloquent sort of projection on where we are going. You, in my view, is at the helm of one of the most, in my opinion, one of the most important and crucial ministries. Because if your objectives are successful, even 50%, it will make a significant difference, and it will make a difference that will be very permanent in our economy. So finally, this is a large gathering of major private sector corporations and chief executives and representatives. What is your message to them?
Well, what I can say is the government has had the courage to take on a lot of reforms that usually would have been not very popular. But we've taken it on. Today we are debating the foreign exchange bill in Parliament. We are making it more flexible, more friendly to investors, businessmen, etc. We are also changing, looking at the land laws, the rigid land laws, the tax regimes, etc., investment processes, foreign direct investment process, making it easier, ease of doing business, indices, the key issues. Most of all, I think above all, it's about political trust. People need to trust the government. People, when you want to invest, you want to make sure that your investment is secure and that you have to make sure that our policies are consistent. I think that's the key thing. And that's the message that we've been working on. The first 1.5 to 2 years as a government has been tough. This is not a usual government, it's a national government. We have a number of parties representing different ideologies, but we've managed to come into one line of thinking. We've set the course. We have decided on our investment policies, our tax regime, our foreign exchange policies, land policies. That's, I think, the right message. Right now we have set the main fundamentals. Now our next step is to make Sri Lanka, the Sri Lankan market, the most competitive market for everyone to come and set up in Sri Lanka, to give you what you require, for you to walk in and for you to be able to start moving. If you look at Sri Lanka, we've worked, our objective has been to diversify our product base. In 1977, we moved from a plantation economy to a service and manufacturing economy. And we started the manufacturing base. But now we need to move to the next step. We need tacit knowledge, we need technical know-how, innovations. That's what we are looking at, the next step. And for that, the incentives, the support, the fast-paced movement of approvals, etc., and consistency in our policy and security of investment are the key areas that the government will concentrate on right through from now onwards to make that jump. If you look at the exports of of Sri Lanka. We've grown very slightly. If you take 2000, in 2000, I think our exports were like $5,000 million. It moved up to $10,000 million in 2014. If you compare that with Bangladesh, Bangladesh was around the same as Sri Lanka in 2000, and it has moved up to $30,000 million. That's the difference. So if you look at it, in terms of export percentages, in 2000, we were something like, we had 30% of GDP for exports. It has dropped down to under 12% today. So obviously we have not done the right things. The government is therefore pushing this drive to support value addition, the value chain support, and I think all the necessary governmental mechanisms to support this are in place. The political will is now right in place after 2 years. And I think as a first start, we are setting off the Hambantota port investment. And along with that, we are taking some other bold decisions to move into further opening up the economy for more investments in Sri Lanka. So I think this is a good time. I'm particularly, I think I would like to finally say, the local business community, the private sector. I think we usually talk about the private sector being the engine of growth. In the last budget, we introduced over 6 concessionary funding schemes. There is no development banking scheme that has moved on in the last couple of years. So we've pushed these special schemes at concessionary interest rates. It has just kicked in last month, and it ranges from the SMEs to the medium and the larger industries. So outside the agricultural sector, we are also starting a credit guarantee scheme for small-scale industrialists, so that there will be the small industries that can be built up. So the maximum possible incentives are going to be given to the private sector in Sri Lanka also to support this drive. So I think we've got a lot of things in place. Thank you.
Thank you, Minister. And in conclusion, I just want to remind you that there are audience polling questionnaires on your table. Please feel free to please fill them up and send it across to the management. I would like to take this opportunity to thank all the panelists, particularly the Honorable Minister who has taken valuable time off his schedule, Thilan, and the others who have also spent a lot of time in doing the resource work for this. And finally, I would like to thank the audience and the Colombo Ceylon Chamber of Commerce for putting this event together, and I hope you receive some insights as to what is in store for you in this session. Thank you very much.